Good day. This is Matthew Dazo. This is 217 Top Trades, and it is 9/19 Sunday. Have a good day Sunday, but I have a little extra here for you. I got some uh, questions and answers that I'm going to you know pertain here, and I hope you guys like this. Like, subscribe, and enjoy. Here we go. Number one is why futures, and can we have a look at the indexes? So first off, for futures, I look at futures a lot like what's going to happen obviously in the future. That's exactly why it's called indice futures. So I first started out, I went to Lincoln Land Community College, and Mr. Harmon, we had a ag financing class, and to we had to learn all about futures and marketing and all that stuff, and that's where I really took up on how much I love the markets and everything. But anyways, that's for another day. But so he gave us 200,000 to use. It was like a play 200,000 obviously, and we used it for just commodities only, and that's why I'm big into commodities too. So but anyways, commodities, we used that for probably about 2 months, and I ended up winning. I had 60,000 extra, so I had 260, and that's what really got me into this, and how not easy, but how fun. You have to actually learn a whole bunch of different things and how they move in markets and stuff like that. But anyways, that's how I first started. I outbeat everyone in the class on all the futures. We traded everything. I remember I traded cocoa, I traded hogs, corn, soybeans, just a lot of it was lumber, just everything. And anyways, I won that, so that's what really got me into this. And let's go on to number two here. How do you catch a mover before it moves? So I'll be going into this more in depth, like like a volume chart, so just stick around for that. But to really catch a move, you really need a couple things. You need volume, you need research, and you need to analyze that stuff that is given to you in charts, and then you need to execute that what you have learned. So that's what you really need to do, and I'll be doing a little bit on that. Let's see here. It says, and a little bit to that is buy the rumor. You hear something about a company, and then they'll eventually sell the news, they say. So you just gotta get before you hear something's good about the company, and then boom, you get to ride that gain that everyone else buys on the rumor. So anyways, that's that. Number three, when is the best time to invest? The best time to invest was 10 years ago. Now, tomorrow, but the real best time is, I would say, on pullbacks, and dips, just like when there's red, you kind of think about this. People are buying, and I got a quote here from Buffett. It says, be fearful when others are greedy, and then be greedy when others are fearful. So that is a true statement to me and to every investor here, that if you buy when it's red, catch a falling knife. It's hard to do, but if you buy when others are fearful, and then be greedy when others are fearful, that really explains that you should buy in the red days, and then on a good day, for how it lifts up all the indexes on a green day, that is when other people are mostly buying. But to really get good returns, you need to buy on a red day. Anyways, that's that. Number four, growth or dividends? Number four, so I would really say both. Obviously, it's good to have both a drip from a company, like let's just say Home Depot, a couple of people, big dogs on the Dow. They're good place to do. But I would just say, whatever your risk management is, if you can lose some, I would lean a little bit more towards growth. But if you can't really use it, lose it. That is, I would just go for a steady dividend. So you just got to watch that. Like dividends, dividend companies, they aren't necessarily going to grow out exponentially, but they'll pay out good. So that's that. And then growth, you're kind of, it's risk versus reward. You're high risk, high reward situation. So it could run up a little bit higher than that said dividend. Anyways, on to number 5. What should I invest in? I'll be doing another video probably on this later on, but what should I invest in is anything that you buy into. Literally, you buy from Amazon, you look at Facebook every day, you look at, you go to Home Depot, you go to use Apple products, Lululemon for women, Ulta Beauty, Target, Lowe's, you have an air conditioner. I have an air conditioner right back there, and it's a Carrier. Carrier is a good idea. Anything that you use personally is what you should invest in as well, because then it's making you money while other people are going in there as well making you money. So that's that. Look, I'll be doing further analysis into what to do or what to pick, but that's just, you got to look for what you want to do and what you buy into. Starbucks is another good one. But anyways, on to my 6th and final one for you guys. Let's see. It is diversified ? Diversified is a absolute yes. Got to, have to, need to. Always looking to change as well. As like I said, this past Friday they had a triple witching, where they all indexes, index futures, indexes, and stock options all came up due. So they're looking to get into something else and something new, just rebalancing their portfolios. And that's what I've been looking into. So I'll be doing probably another video on that to give you guys a little bit more insight. But anyways, yes, you have to get growth and dividends, like I just said. Plus you have to have cash, crypto, maybe metals. ETFs are a little safe. Land is safe. Real estate's a very good investment. So just the allocation of all these things are huge and crucial. Kevin O'Leary said this at one moment. He said you should have at least 50% in stocks, 20% in cash, 25% in bonds or anything like that, and then 10% or 5%, in crypto. So you just got to watch for all these things. Crypto has been booming as of late, and I think there's a big bank that actually said that they posted on their balance sheet that they are not holding very much, the lowest that they have ever held in gold right now. So that's a huge thing to look at. And what are people buying? Their bond markets are been huge lately, and that's a good thing, but that's huge money that you got to look for. But there are other things in the markets that we have to look forward to, and that everyone will be able to look forward to, as the market is dipping right now, and we'll see where it goes from here. But anyways, subscribe, and I appreciate your views and everything, and I hope this helped you in investing. And this is 217 Top Trades. Have a good one. Bye.